6% in April and 6.7% in May, but it declined to 6.4% in June. And we have made a number of interventions, as you are aware. First, on fuel price stabilization, we have used the Petroleum Development Levy to fund pump price subsidies. And we have also had to do temporary tax relief. So in April 2026, VAT rate on petroleum products was reduced from 16% to 8% for an initial 3 months. But because the situation has also not improved, there has been another temporary relief for the next 3 months, starting from July. And we hope that by then, the situation will have improved, and therefore we should be able to do away with that tax relief. Next slide. Interest rates have come down generally. In line with decline in inflation, interest rates have come down. We have seen the central bank rate being reduced from 13% to 8.7%. This is what is called easing of monetary policy. Because of that easing of monetary policy, we have seen also Treasury bill rates coming to as low as below 8%. And the numbers I have here is at least 8.2%, but I know that we have had even up to below 8%. So even lending rates had also dramatically come down. And I think the increase now in the rise in inflation could potentially reverse this trend. That's why we are working very hard to make sure that we retain or make sure the interest rates continue to be low. We have also seen private sector lending go up by 9.3% in May 2026. And this is compared to 2% in the same time last year. And we see this growth in credit remaining strong in trade, building and construction, and agriculture sectors. I think that slide has more details, and I believe you will access this so you can be able to read. Next slide. When we look at the external sector, we see the current account deficit widening, reflecting the prices, especially from imports. So we see current account deficit going up to 2.6% compared to 1.7% in the year to April 2026. And over the same period, we have seen goods, the value of exports of goods going up by 4.2%, especially driven by horticulture, tea, coffee, food, and machinery and transport equipment. We have also seen services increase by 4.8%, driven by transport and travel services. But over the same period, we see imports increasing by, the value of imports going up by 8.5%. And this reflects higher imports of food, intermediate and capital goods, as well as fuels, especially petroleum. We have also seen remittances over this period increase by 1.1% to about 5 billion shillings. US dollars. Over this same period, we have seen our foreign exchange reserves go up to the highest level we have ever had. We're now talking about 6 months here, but I know also with the latest developments, we could be potentially talking about 7 months of import cover. That is the highest level of reserves ever. And that has helped us to cushion our economy from these external shocks that we see. The situation would have been worse if our reserves would have been low, because our shilling would probably have been under pressure, and the central bank would not be in a position to intervene as much as it is able to do it now. Next slide. Another good story is that we have had a stable shilling. From the time we did issuance and buyback of the famous 2 billion Eurobond, which was maturing in June 2024, we have de-risked the environment, and we have seen a central bank able to maintain a stable and a predictable exchange rate. Stability and predictability is everything for any business person. So even with the pressures we have seen, the shilling has held steady. And I think this is something we appreciate. Next slide. I want to finish the macros by looking at the performance of the stock exchange. And capital market indicators indicate improvement because of investor confidence in our economy. It also reflects many things happening through the central bank. And you may have seen that this year, the Nairobi Stock Exchange was rated or ranked the 4th best performing stock exchange globally, with an all-share index return of 26.77%, about 27%. So if you invested in the stock market, you're talking about a return of 27%. That is very impressive. And we can talk about wealth growth having gone up by nearly $1 trillion. And you can see that Nairobi, this is 20 share index of nearly 3.8. Actually, we're talking about the index having gone up by 56.2% to 3,998 points as at 20th July this year. And market capitalization is at the highest level ever at Kenya shillings 3.9 trillion. That's about 55%. And we have also seen that the successful issuance of the pipeline IPO, that is the KPC, and the divestiture by government of its 15% stake in Safaricom to Vodacom led to improvement in the capital markets, especially in deepening market liquidity, broadening investment opportunities, attracting foreign investment, and advancing government's privatization agenda. The proceeds from these transactions will provide seed capital to the National Infrastructure Fund, which I shall come back to later. Next slide. So now let me look at the performance of our budget in the last year, which has just ended in June. We implemented our budget. Of course, we had challenges, and you can see that by end of June, we had revenue collection was below target by about 90 billion, mainly on account of shortfalls in ordinary revenues, and I will come back to it in another slide. Expenditures also were below target by 190 billion, largely because of the below target absorption of especially the development budget or the development expenditure, as well as recurrent expenditure of the magnitudes that you see. And we did not also transfer to counties about 47.3 billion, which is part of the development budget that comes from the national government. So we settled at a budget deficit of 6.7% against a projected target of 7.3%. And we financed this largely through domestic borrowing. I shall come back to this later. So let's go to the next slide, where you see the performance. You can see compared to June 2025, the performance up to June 2026 shows that total revenue grew by 8.6% compared to 9.2% last year. But when we look at ordinary revenues went up from 5.7% to 6.9%. And this is more so on the tax revenue. I want to draw your attention to the fact that tax revenues went up from 5.2% to 8.3%. And we see this improvement in all tax heads except perhaps excise duty. But otherwise, the rest, import duty went up, income tax, you can see how it went up, payee and the others, VAT went up, and other revenues. We also see non-tax revenue having declined, but we have appropriation in aid having gone up by nearly almost 17%. So total revenues amounted to about 3.1688 trillion, resulting in a performance of 9.1 billion, as I had told you earlier. Next slide, please. On the expenditure side, you can see that recurrent expenditure was below target by 110.6, and development expenditure was below target by 32.5%. And the county allocation, the equitable share, we were able to pay everything, but the conditional allocation was below target by 47.3%. Next slide. So this is the deficit financing. If you are interested, you can look at more of the details, but I think what is important is the fact that our total financing deviated by about 17 billion. You can see there, and you can see that the deficit was financed largely by domestic financing. What is important is the primary balance. You can see we are in negative, and this is not where we want. We would like to improve our primary balance. This is why going forward we are seeking to improve on this by pursuing fiscal consolidation. Next slide. So the challenges that affected the implementation of the budget for the last year were mainly revenue shortfalls, and this I shall come back to later when we look at the last 10 years. But we also have pressures on the expenditure side. So we have a situation where revenues are not growing faster than we would like, but there's a lot of pressure on the spending side. Every ministry wants money, and we are not providing enough of what you would like to have. We have also seen pressure, especially on collective bargaining agreements, which have been negotiated, and therefore we have to honor them. And then we have had emergency situations where we have to require interventions and therefore additional resources on drought or floods. And then we have additional expenditure requests by ministries, as I've indicated, which is already putting pressure on us because we have a very tight fiscal space. Next slide. So this is the situation as at June, where we have what we released as a total exchequer. What we are happy is that we were able to release, for the second year round, National Treasury was able to release all the exchequer requests for the year. So the other year, 2025, June, we released all the money that had been budgeted for and asked, exchequer asked. This year, that's the same thing again. We managed to pay all exchequer. Now, where did the exchequer go? The funding, most of it went to pay for debt. 44% of the 4.9 that you see there, 4.9 trillion, went to pay up consolidated fund services, which is debt, interest payments, and pension. The other amount is recurrent, which is at 7%. Development is 10%, and equitable share is 9%. Please hold this because I'm coming back to another slide that has a longer, the history, where we can see where we have come from. But the point is, you have CFS and the current budget taking up 81% of the resources that we gave. Very little went to development. Next slide. So what is the situation for this year? Parliament approved the budget, and that approval has the following figures. You can see that we are looking at a projection of 3.63 trillion Kenya shillings as a revenue, which is about 17.4%. And in terms of ordinary revenue, we are talking about 14.3%, which is just about 3 trillion shillings. And the overall expenditure, we are talking about 4.8 trillion. And even with this figure of 4.8 trillion is almost a trillion less than what the ministries asked. Almost a trillion shillings was not funded. We could be able to afford this, and therefore we are projecting the resulting deficit being about 1.1 trillion or 5.5% of GDP. That is still high. It's our desire to bring the budget deficit even lower, because we need to address debt vulnerabilities, which you have already seen is becoming a big issue in our budget. So we will go to the next slide now, which is just general information about us, because we are discussing about budget making, and it's good to appreciate what is really in the fiscal space. So one of the things coming out is that in the last 10 years or so, from 2014, our tax as percent of GDP, the tax revenue, or not tax revenue, but ordinary revenue, have declined from 18.1% to 14.2%. You can see there's a slight decline. This is not what we want. We want to see the reverse of what we see, where it is going up to almost 20% or more. So this is, we attribute this decline to tax compliance gaps. We have also seen increased tax expenditure, even though we have tried in the recent past to address part of it. But we also see higher growth in low tax yielding sectors. So you have agriculture growing, but we are getting very little tax from agriculture sector, which accounts for nearly a quarter of our economy. Next slide is on the expenditure side. No, go back to the expenditure side first. Yes, that one. Okay, yeah. Okay. Yeah, next slide is. This is on the expenditure side. And you can see that expenditure as percent of GDP is rising. And in fact, here we are showing, we are actually not even showing as percent of GDP. We are looking at as percent of ordinary revenue. So CFS used to account for about 18% in about 10 years ago, about 12 years ago. Today, it is 51.8. We are taking up 50% of what we raise as ordinary revenue goes to pay debt and pension. So clearly, you can see another 10 years, if we continue in this, in the way we have done, then it means everything we'll be collecting will be paying debt. That's not a scenario we want to paint. The second point coming out of here is that ordinary revenue, I think next slide, please. Yes, that is the expenditure side as percent of GDP. You can see also that recurrent expenditure has increased. Then development expenditure has shrunk. And this is also the case for what goes to counties. It's also shrinking. Why? Because most of it is going to service, especially the CFS. So what the point we make here is that expenditure has remained elevated in recent years, reflect sustained government spending pressures. Next slide. So CS and everyone who is here, I think this is what we like to repeat in every forum like this. Next slide. We have a national tax policy and a medium-term revenue strategy. Our medium-term revenue strategy is coming to an end next year. So we are beginning to start to look at a new strategy on our tax, our revenue mobilization. So in coming up with this new strategy, and while implementing the current one, we are looking at tax laws. So CS will be still doing issues to Parliament of our tax laws to simplify them and to harmonize them. We are also going to work hard to still rationalize and target tax expenditures so that we reduce them. And then we need to create a simple, predictable, and a fair tax system. We have also supported KRA to enhance tax administration. Here we are looking at improving efficiency, improving compliance, and domestic revenue mobilization. As has been indicated by our CS, our intention is not to raise any tax rates. We believe that with what we have now, we can collect more if everyone is paying, because the burden of taxation is on a few Kenyans. We would like everyone to bear that burden so that we make it lighter for all of us and we are able to collect enough to finance our expenditures. So we want to scale up also non-tax revenues, as I have indicated there. Next slide. So KRA is looking at a few areas, and I thought I should just mention looking at tax broadening, tax-based broadening. So here we want to reduce exemptions. We want to expand coverage to informal sectors. And KRA is also looking at compliance and enforcement, so they are focusing on risk-based auditing, anti-evasion measures, and cross-border information sharing. On digital tax system, KRA is focusing more on e-filing, mobile payments, real-time data analytics for revenue collection. Then we are also looking at progressive tax design, where we want to balance the needs for equity and avoid regressive indirect taxes that fuel instability. We are also focusing through KRA on taxpayer trust, where we want to see more transparency, more simplified procedures, and more visibility of public service delivery as a social contract to the people of Kenya. And finally, international cooperation, where we want to ensure that we comply with international tax norms, particularly those by OECD and others. Next slide. So on the expenditure side, we intend to roll out e-procurement, and I believe the CS and some of our colleagues who are here will focus on this. We want to make sure everyone e-procurement going forward. We are doing a full implementation of the single treasury account, including automation of exchequer processes and integration of state corporations and SAGA's daily cash balances to enhance visibility of accounts held in commercial banks. You may have noticed that now, if you are an MDA and you send us exchequer request, we have introduced something called twinning program, where what you ask for, you must pay in accordance with what you have asked for. You cannot have the laxity or the leeway to go and change checker to pay for something else that you didn't give us. This is what we want to see also in counties, that whatever counties ask, the money they are given, they use to pay exactly what they have asked for. We want to see cash-based movement, continuous transition from cash-based to full accrual accounting basis across all the public sector. And there is a lot of reform in the pension sector through digitization and automation and end-to-end enterprise resource planning. There's also a lot of progress on HRIS integration with IFMIS, and I believe CS may say something about it. And we are also using a lot of the PPP framework, and even now with NIF that has come up. So next slide is on state corporations and government-owned enterprises, which is another area we have focused on reforms. There's a lot of work, comprehensive reforms which are underway to rationalize state corporations by streamlining their mandates, eliminating duplication, strengthening governance, and improving operational efficiency. So phase one of these reforms covers 23 mergers, 16 dissolutions, 7 transfers of functions to MDS, and the declassification of selected state corporations. And you may be aware that this is very advanced now. We have Parliament looking at enabling legislation, And so bills have been prepared, and there is a lot of work also in looking at staff rationalization and verification of assets and liabilities to ensure a smooth transition. We have the Government-Owned Enterprise Act, which has been passed into law, and this establishes a modern framework for the ownership, governance, oversight, and performance management of commercial corporations. So these reforms affect 65 government-owned enterprises and 18 statutory entities, including the recruitment of independent directors to strengthen corporate governance. I think this advance, there's already a panel in place, and very soon you will see appointments of new independent directors recruited competitively. So these will operate on a commercial principle, enhancing fiscal or financial sustainability, reducing dependence on the exchequer, and improving their own service delivery, as well as enhancing, strengthening accountability of to the National Treasury. So let me finish this side of presentation by looking at financing of government policy and medium-term programs. One is, we have now the National Infrastructure Fund, which has come into being through an act of parliament called the National Infrastructure Fund Act. And this is going to help us mobilize private capital and execute and to also get expertise. And I think we already have about 106 billion from IPO and 204 billion from PLC. Then we have the Sovereign Wealth Fund, which is also now in law. This Sovereign Wealth Fund has stabilization component, it has strategic infrastructure investment component, and the future generation, what is called URIDI component. And I will not go into details. Next slide, please. Next slide. So I want to finish this, yes, by indicating this, that we had indicated we wanted to pursue fiscal consolidation. And you can see we succeeded from 2022 to 2023, 2024. And then 2025, we saw the fiscal deficit going to 5.9. And then it has come to 6.7. This year, as I indicated earlier, we have targeted this year 5.5. Our target is to pursue fiscal consolidation to make sure that we, by 2029, 2030, we are talking about 3% of fiscal deficit. Finally, we always like to show figures also on debt. Next slide. That is where we are. You can see how the debt has grown. And this is stock of debt. I already talked about interest payments. And you can see where we are. We have tried in the last few years to stabilize debt through a number of actions, including liability management. That's why you see from 2023, it's coming down slightly as % of GDP. Next slide. So pending bills is, I think you heard the minister speak to it in parliament, that the committee on verification has completed, and we already settled the 80 billion through the securitization of PDL. Is it petroleum development? No, road maintenance levy, yes, RMLF. And the balance of 155 is what we have indicated. The minister pronounced himself to about 68 billion settlement of what has been verified, and this is on course. And finally, I just want to talk about, I think that is details of the pending bills. Let me just talk about what others say about Kenya, because sometimes we blow our own trumpet. What do others say about us? So first, in April this year, I think Minister and I were in Washington. I had the opportunity to receive an award by World Bank because Kenya was recognized a top performer, and human capital champion for its significant progress in building human capital through investments in health and education. And it was identified that the key driver of our performance was a 16% drop in child stunting, improved education outcomes, and high renewable energy use, which is over 93%, which supports workforce development. In November last year, Kenya topped African economies and was ranked 56 globally in what is called IMD 2025 Global Competitive Ranking. And this reflected a combination of rapid structural reforms we have been undertaking, institutional modernization, and sustained policy execution that distinguishes it, that is distinguishing Kenya from its peers in the region. Next slide. We have ratings by agencies. First was Fitch ratings, which put us on B- stable outlook. This was affirmed in July 2026, reflecting strong medium-term growth prospects, resilient foreign exchange reserves, and low volatility in GDP, balanced against high debt servicing costs, fiscal consolidation challenges, and government-related risks. Moody's put us at B3 with a stable outlook, and this was upgraded in January 2026 from CA11 to B3, citing stronger external liquidity, improved debt management, and lower refinancing costs. Standard & Poor's just this last week, on 22nd August, upgraded our rating from B- to B. And again, it reflected reduced near-term external liquidity risks, improved foreign exchange reserves, and driven more by our performance in exports and remittances. So these ratings are important for us, especially in our access to international market. I want to stop here, CS, because I think I've done more than my fair share of time. So let me give the opportunity to PS Planning to present to us the medium-term framework that underpins this budget. Then after that, before you sit down, please call on our colleague, Cyril. Thank you.
Thank you, my brother PS. Honorable FCPA John Mbadi, CS National Treasury, Honorable Samuel Atandi, Chairperson, Parliamentary Budget Committee, all my colleague PSs, led by Dr. Kipto and my brother Cyril, senior government officials, development partners, members of the fourth state. I want to start off CS just giving introductory remarks as I wait for the presentation to be loaded so that I can run us through very quickly because PS Kipto has been able to look at some of the areas in detail. CS, it is my pleasure to join you today and the team for us to look at the 2027-2028 medium-term expenditure framework budget preparation process. I want to start off by commending the National Treasury, and also the MDAs for the continued commitment to strengthening Kenya's planning and budgeting system. MTF remains one of the government's most important instruments for translating national aspiration into tangible development outcomes, and it is through this process that we align policy, planning, budgeting, and implementation to ensure that every public investment contributes to inclusive economic transformation. The financial year 2027-2028 budget is particularly significant. It will be the final full year budget under the fourth medium-term plan for MTP4, and therefore a critical opportunity to consolidate gains made under the bottom-up economic transformation agenda, while laying a very strong foundation for Kenya's next long-term development journey beyond 2030. Therefore, as we prepare this budget, I wish to leave us with one guiding principle. The budget tells us where we are spending the public resources, but what went to recurrent, it is important that we prioritize. And therefore, my clarion call is that every accounting officer should ask 4 fundamental questions. And this is from planning perspective. Does this program or project implement the priorities of MTP4, which I will highlight in the slides? Does it advance the bottom-up economic transformation agenda? Can its results be measured? And if the results will be measured, most importantly, will Mwananchi experience the impacts that result from the outcomes from the implementation? The success of this budget, CS, will not be measured by the amount of money appropriated, but by the value it creates for the people of Kenya. Our collective responsibility is therefore to prepare a budget that is physically responsible, evidence-based, result-oriented, and fully aligned to our national development. CS, with those brief remarks, allow me to run quickly through the key highlights of the fourth medium-term plan and the bottom-up economic transformation agenda, which together provide strategic framework for the preparation of this financial year's budget. We can move to the next slide. Let's move to the next year. So when we look at the MTP4, one of the guiding principles is we have to look at what were the objectives that are set there. What are the core pillars of better, and which sectors are we looking at? So my highlight will be able to try to answer questions on the objectives that were set and through sectors, of course, with the key pillars. Next slide. Next, because that one, PS has pronounced himself on that, yeah. What I want to look at is the achievements. Very quickly, MTP4, I know we have looked at this and it is there, but a quick highlight on achievements. We have a detailed document on this. We will be able to circulate, but very quickly, what a few of the achievements based on sectors, on finance and production. The real GDP, like PS has said, remained resilient, and it grew by 5.3 in first quarter, according to the KNBS statistics of 2026. If you compare this with 2022, where we started with MTP4, you'll see that it was 4.8, despite what we know that we've had serious challenges, economic uncertainties. If you look at the GDP grew from 2,109 in 2022 to around 2,500. Next slide. Yeah, some of the achievement, and this is on agriculture, we have detailed and to show the achievements despite the pressures that we've had. And if you look at the last column, the percentage increment in terms of comparing the financial year of 2023 and 2024, 2025, if you look at the achievement, you realize that it is in the positive direction. We have, like, if you look at the seedlings of coffee provided, the achievement is in percentages in thousands. Some of the percentages beyond 100. So let's move to the next slide. Yeah, on infrastructure, the key highlights on the achievements, if you look at the electricity capacity, compare 2022, it was at 2,984 megawatts against 3,800 in 2025. While the households in 2022 that were connected to electricity, about 9 million, compared to what we have is about 10.6 million. You look at something like the affordable housing, those that are under construction and completed, they are over 260,000. Compare with the best in 2022, which was about 8,872. Next slide. On the social sector, I picked a few things. When you look at the teacher to student ratio, pupil ratio, in 2022, one teacher averagely was handling 41 pupils or students. But because of the recruitment, massive recruitment that was done between 2022 and today, of about 100,000 teachers, has reduced that ratio to one teacher now averagely handles 38 pupils, meaning now the quality of interaction has improved. Next slide. Still on the social sector, when you look at issues to do with the doctors' ratio to patients, in 2021, it was between 1 to 5,000. Yeah, one doctor handling around 5,000 patients. And in 2025, we have one doctor handling about 3,000 patients. So there is a positive increase in terms of the quality of services offered. In terms of the life expectancy, in 2022, CS, you'll note that if you are around 63.5, then probably you'll be told to be preparing for your exit from this world. But because of the improvements in the sector, health sector, now at least it has improved that when you're around 67 there in 2025, we know you're still on this earth. In terms of community health promoters, in 2022 we did not have. That is the best. But right now we have over 107,000, which is bringing health closer to the people. Next slide. When you look at the environment and natural resources, we've been able to plant trees, and this being a directive by the president. We've been able to do about 1.7 billion trees. We have restored almost 385,000 hectares of degraded forest and landscapes through natural regeneration and tree planting. Next slide. On governance, CS, if you look at that sector, number one, we look at the High Court stations. In 2022, we had 41. And what is the target? And by the way, when I present this, I'm looking at what did we plan as a country in MTP4. So the target was 47. That is one High Court in each of the counties. So far, we've been able to achieve 46 high courts. So we are only short of one. And the judges, they have increased from 763 to 824 within the same period. In terms of public service delivery, we have been able to transform public service delivery through the establishment of additional 52 Huduma centers. And something to note, CS, is that on this sector, allocation to the counties in 2022, when MTP4 came to life, of course, 2023, financial year 2022-23, the allocation was about 392 billion. That is shareable revenue and additional allocation and donor proceeds. But as we speak today, in the financial year 2026-2027, it has shot up to 502 billion. Let's move on. Those were the achievements. And from the achievements, CS and colleagues who are here, you will agree with me that all of the achievement that we are showing, it shows a positive trend, an increase in whatever the base was, and we are almost achieving our targets in terms of what we planned. So what are the priorities that we are highlighting for this financial year that we are planning for? Back, can we go back? Yeah. Finance sector and production sector, we are saying that if we have to achieve progress that we require, of course, at scale and speed, because we are tail end of Vision 2030, they planned for 25,000 kilometers, at 26. We are at 25 CS. We are short of 1,000 to reach a target. But when you look at what is happening, especially the Rironi and all constructions that are going on, we are going to, when we look at the diaspora remittance, is a contribution, its percentage contribution to GDP is high. So we have to look at that area. We also have to look at issues to do with the leadership, ethics and integrity development, and judicial reforms. Next slide. Why do we have to look at all this? We are simply saying that MTP4 always has to align with the budgets. And whenever the budgets are done, we have to refer to the MTP4 as our reference point, whether we are aligning with it, because it provides national priorities, development priorities for us. The key message here is that every budget allocation should directly contribute to achievement of MTP4 / better outcomes. So as the accounting officer, when you budget everything, please check whether it aligns and contributes to the outcomes of MTP4 and better. Next slide. Finally, CSR, to ensure that we strengthen the national planning architecture, we have initiatives that we have put in place, and one is drafting the economic planning policy and bill that will support the budget-making process. But we are also putting in place what we are calling the economic intelligence unit to be able to tell us in advance so that we are not reactive in terms of our advices. I think I want to end there and invite my brother PS Cyril Odede to come and make his few remarks. Asante sana.
The Cabinet Secretary, National Treasury, FCPA, John Mbadi, Principal Secretary, National Treasury, Dr. Chris Kipto, Principal Secretary, State Department for Economic Planning, Dr. Makoa, Honorable Chairperson of the Budget and Appropriation Committee, Samuel Atandi, distinguished principal secretaries, present development partners, representatives from county government, colleagues from ministries, departments, and agencies, ladies and gentlemen, good morning. It is an honor to join you for the official launch of the financial year 2027-2028 medium-term budget preparation process. This occasion marks an important milestone in our national planning and budgeting cycle, reaffirming the government commitment to prudent fiscal management, transparency, accountability, and efficient allocation of public resources in pursuit of our national development priorities. The budget is more than an annual financial exercise. It is the principal policy instrument through which government translates its development agenda into tangible programs and services that provides the lives of Kenyans. As we embark on this process, it is imperative that every public institution embrace result-based budgeting, fiscal discipline, and value for money principle to ensure that every shilling entrusted to government delivers measurable economic impact. The State Department for Public Investment and Asset Management remains committed to supporting this process by strengthening the governance and performance of state corporations, promoting efficient management of public investment, enhancing oversight of government assets, and advancing reforms that optimize returns from public resources. Through sound investment decision, improved corporate governance, strategic asset management, and effective public-private partnership, we continue to contribute to sustainable economic growth and improved service delivery. As we prepare 2027-2028 budget and medium-term expenditure framework, we must collectively ensure that our plans are aligned with the bottom-up economic transformation agenda, the Vision 2030, and the country's fiscal consolidation objectives. This call for close collaboration among national government, county governments, parliament, development partners, and private sectors to ensure that available resources are directed towards high impact and transformative programs. I commend the National Treasury CS for providing leadership in this important process and for fostering broad stakeholders' participation in the budget preparation. Such collaboration strengthens public confidence, enhances accountability, and ensure that our budget reflects the aspiration and priorities of the people of Kenya. As a State Department for Public Investment and Asset Management, we reaffirm our commitment to working closely with all stakeholders to ensure that the financial year 2027-28 budget advances sustainable public investment, safeguard public assets, and deliver lasting value to Kenyan people. In conclusion, CS, allow me to urge all government entities to fast-track implementation of electronic government procurement system. We rolled this system in July last year, and the uptake is very good. And from this financial year, 1st of July, as you pronounced yourself in Parliament, there will be no more exemptions. The reasons why EGP was brought as part of the reforms is to enhance transparency and accountability, increase bidders' participation, enhanced reporting, efficient procurement and disposal process, and reduction of transaction and operation cost. And this also increased authenticity of procurement documents. So EGP is a flagship project, government project reforms, that fundamentally transforms public procurement in Kenya. The access of EGP depends not only on the technology, but also on the commitment by all procuring entities to its use. On other reforms, the PS National Treasury has already elaborated on them, and this was the state corporation reforms, the government-owned enterprises reforms, and pensions reforms. CS, thank you for giving me this opportunity, at least to highlight those a few issues. Thank you very much, and may God bless you.
Yeah, it's now my pleasure to welcome the chairman of the Budget and Appropriations Committee from the National Assembly, Honorable Samuel Atande. Karibu.
Thank you, PS. Cabinet Secretary, National Treasury, Principal Secretaries present, government officials, development partners, representatives of the private sector, civil society, and the Fourth Estate, distinguished ladies and gentlemen, good morning. I am honored to join you today for the formal launch of the sector working groups that will steer the preparation of the 2027-2028 budget and the medium-term expenditure framework. On behalf of the Budget and Appropriations Committee, I thank the National Treasury for organizing this forum, and I congratulate all officers who have been nominated to serve in the sector working groups. Your work will help shape public resource allocation and over the medium term and determine how actively government delivers services to the people. The Constitution of Kenya and the PFM Act provide for an open participatory budget process guided by prudence, transparency, and accountability. Sector working groups usually launch in September, but for this year's schedule has been brought forward so that Parliament can be able to complete all budget business before rising ahead of the 2027 general elections. The process, including the launch of the sector hearings, the consideration of the approval of budget policy, public participation, and approval of the appropriation bill must therefore be compressed and concluded well ahead of the elections. I urge every sector working groups to treat National Treasury timelines as firm and non-negotiable. We expect you to front-load your technical work so that Parliament can discharge its constitutional duty of scrutinizing and approving the budget within the revised schedule. The Budget and Appropriations Committee has already reorganized its program to match your output with timely legislative action. I want to speak briefly on the role of Parliament in the budget-making process, because in the recent past, we have had areas where there's been some conflict during the budget-making process, where departments and accounting officers get the feeling that Parliament is overstepping its mandate in the budget-making process. Article 221, subsection 4 of the Constitution of Kenya requires that before National Assembly considers revenue and expenditure estimates, Budget and Appropriations Committee must discuss, review, and recommend changes. Article 221, subsection 6 requires the House approval of estimates before they are included in appropriation bill. This framework envisions active parliamentary scrutiny and not executive rubber stamping. Section 39(1) explicitly states that National Assembly shall consider budget estimates with a view of approving them with or without amendments. Section 39 sub 3 states that the conditions amendments must align with the Division of Revenue Act and budget policy statement resolutions, and any spending increase must be offset by either a corresponding reduction elsewhere or to lower the deficit. I wanted to emphasize this point because even though we have adopted approach of always having consultations with all of you, ministries, National Treasury, and we are going to continue doing the same. We want you to understand that Parliament has the overriding mandate in terms of writing the budget. And when I talk to departmental committees, when they appear before us, because you engage with departmental committees directly, sometimes they tell us that you do not give them, you do not convince them about your allocations. I wanted to request the sector working groups to ensure that when you appear before Parliament, you give them all the information they require so that they are able to support the proposals that you will present before Parliament. In this environment, the committee expects sector working groups to do the following. One, ensure that resource envelope is realistic and consistent with the macroeconomic environment. The PS National Treasury has already explained to you the macroeconomic environment in which you are operating, and that there's a possibility that going forward we are still going to face revenue shortfalls. So we expect the sector working groups to come up with proposals that are aligned and that are realistic with what is the revenue envelope that we are expecting to achieve. Number two, we expect you to rank programs by impact and alignment to national priorities and not by historical allocations. Now, when you're coming up with your programs and with the ceilings, there's a tendency to come up with historical allocations where in the last financial year, this was the allocation. We want to up it by 20%, 10%. This is not what budget committee is going to expect. So we want you to ensure that the programs that you come up with have impact and they are aligned with national priorities. Number three, we expect you to give priority to sectors and programs with the greatest potential to create jobs, stimulate growth, and improve livelihoods. You know that we are facing a job crisis as an economy, as a country. And there's no better place for us to create jobs than during sector working groups hearings. So the budget committees will be expecting you to come up with programs that, first of all, have impact. And we also believe that every sector is capable of creating job opportunities. So we will be keen to look at the sectors to look at each sector and the priorities you have given to your sectors, and whether they will have an impact on in creating jobs, more jobs for our youth. Number four, we expect you to provide comprehensive and realistic costing of ongoing projects to avoid pending bills and creating unfunded commitments. Again, pending bills remains one of our problems. And when you looked at the presentation by the PS, again, it is an issue that we are grappling with as a country, and we do not want to increase those pending bills by creating more. Number five, we expect you to align sector ceilings strictly with the agreed resource envelope so that you do not submit bids that exceed indicative ceilings. I think that's straight and clear. We expect you to adopt zero-based budgeting. This has been, I think, overemphasized, that we have now adopted a zero-based budgeting, and this will involve regular costing of your programs. The costing of your programs can be done annually, it can be done after every 2 years to ensure that we indeed implement the zero-based budgeting approach. And lastly, because we are facing elections next year, and because elections is not just about IEBC, there are many sectors here that are going to be involved in elections, the security sector, the judiciary, and you know yourselves. So we expect you to ensure that you budget for the elections, so that in the course of preparing for elections, we do not have a situation where somebody is saying, I was not given these resources and therefore I cannot help, or I cannot participate in the electoral process. Now, I just want to speak briefly about the alignment with national priorities. And I want to say that the 2027-2028 budget must consolidate gains under the bottom-up transformation agenda and position the country for sustained economic takeoff. Sector working groups must vigorously examine progress against the 7 priority pillars of the broad-based government, namely agriculture and food security, MSMEs, housing and settlement, manufacturing, the digital superhighway, and ICT, the creative and service economy, environment and climate change. We expect you to assess achievements, identify gaps, propose accelerated milestones, and also recommend resource allocations that maximize impact. Number 4, now the central theme must be private sector-led growth. This government endeavors to create an enabling environment through predictability, reduced bureaucracy, infrastructure, investment, affordable credit, and public sector partnerships. We believe that working with private sector and running a budget which is focused on stimulating private sector growth is going to be the hallmark for us to achieve the visions that are envisaged in the government agenda. Then we have the youth unemployment, which remains pressing. Every sector proposal must demonstrate clear job creation potential through skills development, apprenticeships, entrepreneurship support, digital economy expansion, creative industries, and agribusiness. Our balance of trade is worsening due to limited exports. Investment in agriculture and manufacturing can help improve export volumes and counter the import bill. Support value addition, final product manufacturing, and branding in coffee, tea, horticulture. I think this is something that maybe the CS will speak about. Balance of trade is worsening, and this is because we are importing more than we are exporting. I believe through the sector working groups, the solution is here. How we come up with our budgets is going to inform whether we are going to help in trimming the balance of trade or exaggerating the same. Then we need to ensure that there's coherence with fourth medium-term plan and county integrated development plans. I think these two needs to work together because, you know, this is also where we are going to share resources to counties. So as we come up with our programs, we need to align them with what counties are also doing so that first there's no duplication. Even though we have noted that even at this level, there's a lot of duplications where this particular ministry and the other ministry are handling, are budgeting for the same programs, which have the same impact. And I want to end by saying that this is the last budget of this administration before 2027 elections. Now it is our final major opportunity to consolidate gains, accelerate delivery, and lay a strong foundation for the future. I believe that we are going to continue after 2027 elections. And mostly, all of us who are here, we are going to be here next year to continue doing the same job. So therefore, I believe that this is going to be a very, very important budget for this administration. And therefore, we are asking everybody to ensure that this is going to be a budget of our legacy. Let me say something before I conclude on the public debt. And last financial year, we had a lot of problems. As you're aware, the oil crisis caused by the war in Iran brought us a lot of challenges. As a country, we had to go back to Parliament to lower taxes on petroleum products. If you remember, we had a reduction on VAT, and this really affected our revenue performance. Despite all those challenges, and I want to thank National Treasury team that is here for prudent running of our economy. Despite all those challenges, we ended up with a fiscal deficit of just 6.7% to GDP. Actually, we had projected that the fiscal deficit would end at about 7.5. It was lower. Now, if you compare the average fiscal deficit of the previous regime had an average fiscal deficit of about 9%. So, in a nutshell, what I'm trying to say is that this government is doing way much better than the previous government in terms of prudent management of the economy. And I think we need to thank the team that is here, led by the CS and the PS, for doing a good job, and we need to thank them for that. Let us not fear borrowing. I am one person who believes that we must borrow to run the economy. We can't run the economy from ordinary revenue alone. And therefore, I want to urge the National Treasury that when you have opportunities to borrow resources to help fund our infrastructure and fund our programs, do not fear, because that is what we have to do. Thank you very much, and may God bless you.
Let's appreciate Honorable Tandi once more. It's now my pleasure to welcome Honorable FCPA John Mbadi Ngongo, EGH. Cabinet Secretary, National Treasury. Karibu.
Thank you, PS. Let me start by acknowledging the chairperson of the Budget and Appropriations Committee of the National Assembly, Honorable Samuel Atandi. The principal secretaries, the State Department, First State Department of National Treasury, Chris Kipto, Boniface Makoha of Economic Planning, and Cyril Odede of Public Investment and Asset Management, other principal secretaries present, accounting officers of MDS, development partners, members of the media, distinguished guests, ladies and gentlemen, good morning. It's my privilege to welcome you to this official launch of the 2027-2028 medium-term budget preparation process for Kenya. This process convenes the principal actors in the management of public resources to review, refine, and align with sector priorities with Kenya's Vision 2030, also with the medium-term plan and the bottom-up economic transformation agenda, which is the development policy of this administration, but is aligned strategically with the other two documents that I've just read. And as we take this new budgeting cycle, our collective duty is to ensure scarce public resources are allocated and applied in ways that maximize economic returns, deepening inclusion, which is very fundamental, deepening inclusion, boost productivity, and sustain fiscal stability for the benefit of all Kenyans. We are launching this process well ahead, as others have already said, of the statutory deadlines to allow for sufficient time for careful prioritization, rigorous scrutiny, and meaningful engagement with the stakeholders across the country. I wish to state that we had the option of just living within the timelines and waiting until maybe to start the process around September and just rush the process through to the election, because we are going to have the budget for 2027-28 approved early, around April. But because this administration has put value in public scrutiny and transparency and public engagement, at the National Treasury we saw it fit that we should start this process early to give us ample time for scrutiny and public debate and discussion around the 2027-28. Hence, this early start of the process. So with the 2027 falling within the general election cycle, early initiation ensures alignment with parliamentary timelines and preserves the integrity and continuity of our fiscal planning. This exercise is grounded in law, and it is a good practice. It complies with Article 220 of the Constitution and sections 35E and 36 of the Public Finance Management Act of 2012, which require timely commencement of the budget process. In line with these provisions, the National Treasury has issued a circular outlining the guidelines that all government entities must follow. So let me give the context and outlook. I know the details have already been provided by the two principal secretaries, the one of National Treasury and also of Economic Planning. So I will not bore you again with the same data and details. I will just give the highlights of the context and the outlook upon which are underpinning the preparation of the 2027-2028 budget. So we begin the budget cycle within a complex and uncertain global environment. Recent geopolitical tensions and conflicts in the Middle East have amplified commodity price volatility and tightened global financial conditions. These external shocks complicate our macroeconomic management but do not deter our long-term objectives. Global growth, as you have been told, has been projected to be moderate in 2027, with forecasts indicating an estimated 3.2%, slightly above the 2026 forecast, as the PS had already mentioned. Sub-Saharan Africa maintains relative resilience, with growth expected to remain near 4.3%. But domestically, Kenya's economy is projected to sustain a robust real GDP growth of at least 5.3% over the medium term. This resilience stems from deliberate policy choices and continued implementation of the bottom-up economic transformation agenda, and also of the fourth medium-term plan. So, ladies and gentlemen, as we commence the 2027-28 budget process, allow me to stress a set of principles that could and should guide our deliberations and decisions. Anchor priorities in a realistic macro-fiscal framework. That is the first principle. So every sector submission must be grounded in a credible macroeconomic forecast and a transparent financing outlook. The National Treasury, in coordination with the relevant technical committees, will set aggregate expenditure ceilings and the financing envelope. These macro parameters are not constraints to avoid, but discipline that compels priority setting. Proposals which respect the envelope and demonstrate strong economic and social returns will be most competitive for public financing. So the financial year 2027-28 and the medium-term budget will remain firmly anchored on the government's better and aligned to the fourth medium-term plan and also Vision 2030. Better's value chain approach steers public resources toward areas that generate jobs, raise incomes at the base of the economy, and widen participation in productive activity. The budget will therefore prioritize interventions that deliver tangible improvements in livelihoods and broaden economic inclusion. So we will consolidate gains through a focused value chain strategy and scale successful interventions to bridge the urban-rural divide. And priority areas will include, first, as you know, the 5 better principles. Number 1 is the agricultural transformation. That will be given prominence. So aiming to modernize and commercialize value chains through county aggregation and the national parks, promote crop diversification, strengthen livestock productivity, and expand climate resilient support services to enhance food security and incomes. That should be the focus in terms of agricultural transformation. In terms of MSMEs economy, we will be seeking to expand access to affordable credit, formalize enterprises, establish MSMEs hubs, and scale youth empowerment initiatives such as the Nyota program to stimulate inclusive job creation. Under healthcare, we will seek to fast-track universal health coverage by strengthening primary health care, expanding community health services, and deploying medical personnel and improving supply chains and digital health systems. And under housing and settlement, which is the fourth pillar, we will be seeking to promote affordable, climate-resilient housing and planned urban-rural settlements by expanding financing, supporting cooperative models, and upgrading essential infrastructure. And finally, under the digital superhighway and creative economy, the aim will be to accelerate digital connectivity, digitize government services, build youth digital skills, and support creative industries to spur innovation, employment, and economic diversification. So budget choices will favor programs with strong job creation potential, inclusive income growth, and the capacity to catalyze private sector investment. That will be the focus. Strategic enablers will include energy, transport, logistics, digital infrastructure, and climate resilient investments, which will be emphasized to amplify the multiplier effects of public spending. Ladies and gentlemen, faced with the evolving external environment, the government will pursue a prudent fiscal strategy that sustains macroeconomic stability while protecting priority development spending. I am sure you are very keen when data and figures were being presented by the Principal Secretary, National Treasury. You saw how much we are spending in various areas, especially expenditure heads, and more particularly on debt servicing and other CFS expenditures. And it is not a picture to be happy about. So we must look for ways of reversing this going forward. And that will require a lot of engagement in terms of coming up with prudent fiscal strategy, which will help us in sustaining macroeconomic stability while protecting priority development spending. So fiscal consolidation will be underpinned by sustainable domestic revenue mobilization, rationalization of non-essential expenditures, strengthened spending controls, and measures to improve the efficiency of public investment. Please help us by removing the non-essential expenditures. Don't insist on having non-essential expenditures sit on the budget. Please allow us to remove the non-essential expenditures. And you are in a better position as accounting officers to know those expenditures that can be put aside for us to enhance and achieve fiscal consolidation. For the financial year 27-28 and the medium term, we are committing to a more disciplined fiscal path. We will aim to contain overall fiscal deficit below 3.2% of GDP by the financial year 29-30. And it is correct that the fiscal deficit for 2026-27, we have ended at 6.7. Those are provisional data, which should be basically accurate. But remember that the final approval that we got was 7.3. So it means that we have realized a lower fiscal deficit than what was approved by the National Assembly. Allow us or help us even achieve a lower fiscal deficit for 2027-28, so that by 2029-30, we can be at the desired fiscal deficit of 3.2%. That is the only way to deal with ballooning public debt. I mean, public debt that is putting pressure on us and is crowding out crowding out resources from essential services. So the medium-term fiscal framework will be anchored in the following: one, really GDP growth of at least 5.3% over the medium term. That is the assumption, and that is what we are underpinning our medium-term plan to. Inflation will be maintained within the range of plus or minus 2.5% of the 5% target. That is not less than 2.5% and not higher than 7.5%. 3, gradual easing of interest rates and broadly stable exchange rates. 4, domestic revenue rising to 17.5% of GDP over the medium term. The PS again mentioned here that we have come down to about 14.2%. That is the ordinary revenue as a percentage of GDP. We were at one point at 18.1. This economy has the potential of collecting up to even 22% of GDP as ordinary revenue. But again, our sector has moved largely to informal sector. Therefore, it is very difficult, I know, to go for the taxpayers, but we are making improvements in our systems to make sure that all the taxpayers pay their fair share of taxes without, again, harassing and frustrating business. We want to contain expenditure below 21.4% of GDP over the medium term to support fiscal consolidation. But allow me to just pause a bit, because when we talk about these numbers, and some of them look like they are not very good, it may look like we have not made strides. We still need to do a lot, but I will tell you, as an economy, we have done so much in the past 3 or so years. And contrary to what is being said by the naysayers and the opposition and critics, who a lot of time don't even present data and facts, a lot has been achieved in this administration. And as a counting officer, and I'm sure I'm speaking to Kenyans, and I'm very happy that there is a lot of interest in this hearing today. A lot of interest. Clearly, an evidence that Kenyans have begun to take more keen interest in the affairs and financial management of this country. You can see how the hall is full. Actually, we have even overflow. And therefore, it is important that we engage in robust debate. It is true that our balance of trade has not been getting better, but this is largely attributable to high imports, which is rising faster than exports. And it is largely because of the oil imports in this country, which constitutes about a quarter of total imports. And if we move to electronic or EV vehicles, I am very certain that we will minimize and reduce and make better our balance of trade. We can even have a positive balance of trade very soon, because the tea sector is performing better than it has been performing. Coffee sector has been revived, and it is in a positive trajectory. Even when you look at the fruits subsector, it's doing much, much better. Edible oil, we are putting a lot of resources in edible oil, and it is coming up very, very well. Sugar reforms have already begun to yield fruits. We had minimized the importation of food in this country. And therefore, largely, agricultural sector is doing very well. And the PS told you that manufacturing sector has started picking up very, very progressively, and it's growing at about 4% now. It was growing at negative a while back in 2025. Now it is growing at positive 4%. And the construction sector, I can go on and on. We are all aware that we have recorded high numbers of tourists, visitors in this country, not less than 2.5 million. Although I saw another person who doesn't even care about this country, talking carelessly and recklessly, asking tourists not to come to this country. You knew Chawi. How can you make such a statement publicly, and you have, some people are out of their minds. So, what I was saying is that we are receiving high numbers of tourists, and I believe that we are going to get more. The Nairobi Securities Exchange is not just doing well by accident. It is because of deliberate policies. One of the policies, the reasons why Nairobi Securities Exchange is doing better, two reasons. One, the investor confidence is high. Again, another, that same character was telling people to stop investing in this country. How do you want to lead a country you don't want people to invest in? Does this guy even understand anything economics, really? And these are not people we should just keep quiet when they talk rubbish and nonsense. Because we don't have any other spare country. We have only one Kenya. And if someone stands to talk carelessly, we must call him out for what it is. If he has another spare country, he can leave. He can, and always amia your country, and he leaves us to stay in this country of ours, if he doesn't like it. And we don't have to wait for you to lead this country to progress. And you may never lead the country at all. And with that kind of mindset, I don't know whether we have enough idiots to follow you to lead this country, to support you to lead this country. Kenyans are not idiots. But it is very annoying for someone to tell investors not to invest in our country at a time when investor confidence has risen. And for investor confidence to rise in a country, it takes effort. It does not just happen in a day. It takes effort. And when those efforts have started bearing fruit, please keep quiet. Keep your village politics to yourself. If you don't want to think national, if you want to think village, and you have gone to the village, please live there, sit there, and don't talk. Don't even address the nation. I have spoken like that because I have a duty. I was given a duty by the people of Kenya to help steer the economy of this country. On behalf of the people of Kenya and on behalf of the government of Kenya and on behalf of the president of Kenya. And when I see someone carelessly and recklessly making statements that would affect the economy of this country and would plunge us into more chaos, I have to call him out for what it is. So I have said one of the reasons why Nairobi Securities Exchange has done better is because, one, the investor confidence has increased in this country, and the data is there. The opinion is positive. The second reason is because we in the National Treasury, working together with the Central Bank of Kenya, made sure that the interest rates for domestic borrowing went down. And that therefore made investment in Nairobi Securities Exchange a good option for investors to move to. I think one of us spoke about a return of about 27%. I think it was a PS who said. The return of 27% at the Nairobi Securities Exchange is enough incentive to attract investment in Nairobi Securities Exchange, because investors need return on their investment. That is why they are moving to Nairobi Securities Exchange, giving them good returns. So it is deliberate. These efforts are bearing fruits. Let nobody lie to you that things are not moving. P.S. Makoa told you that we had planned to have about 24,000 kilometers of road network. That we are just less by 1,000. And we are going to hit that possibly by next year. If you go across the country, there is a lot of road construction going on, something that probably has not been witnessed in this country before. The road contractors, because of the decision that we took, has brought road constructors back to the roads. A lot of roads are being constructed. The stadium, we are doing 39 stadiums in almost all the counties of the country. It's not just Talanta Stadium. Talanta Stadium is an international status stadium, the biggest in this country. From 1987, this is the time that we are doing another stadium of international standards. And besides that, we are doing another 39 smaller stadiums across the country, each costing on average about 1 billion shillings. So a lot is going on. But a lot still needs to be done. And I know where there is a challenge. One of the areas where there is a challenge is that Kenyans are complaining they need money in their pockets. But remember this. One, the PS has told you here that for the second year, we are closing the financial year, and that is why I think most accounting officers are here, because you are happy. All the exchequer requests that you gave National Treasury was funded 100%. If you didn't get exchequer requests for 25-26, put up your hand. And that is an economy that someone is telling you is not doing well, where all exchequer requests were released before the end of the financial year. The second year running. Therefore, it means we have stopped accumulation of pending bills in this country, especially at the national government level. If I see any report from any accounting officer of additional pending bills in the last 2 years, you are a fraud. You will explain where that pending bill has come from, and yet we have released all the exchequer requests that you gave us. We have funded counties 100% for 25-26. We have funded NGCDF 100%. We have funded all the approved claims for pension 100%. That is the economy that someone wants to tell you is not doing very well. And we have embarked. The road sector, we have paid all the pending bills, dating back some of them to 2005. We have even shouldered the burden of the Kibaki government, which everybody has been praising, has been doing very well. Kibaki government did well. We have paid some of their pending bills, which have been pending. And now we are in the process of settling others. So this administration has done so well. I know the concern has been on the pay slip. Next month, I am embarking on public engagement on how to reduce tax burden on pay slips. Some of you thought we have shelved that idea. We haven't. The whole month of August, the reason why we are carrying out public participation is because we made a proposal, and then there were other proposals, some of them saying we should reduce pay across board by 5%. We had proposed up to 30%, 30,000, zero pay, and the rest, the next 50, 20,000, reduced pay. But there are others with other suggestions. We want to put all these together, put them before Kenyans. And by the end of August, I'm going to go across the country. By the end of August, and we have agreed with the president, I bring back the report. We will take legislation in September so that Kenyans get some relief on their pay slips. That is the only thing that someone can talk about. You cannot tell us that this economy is doing badly in anything. We have done all that is required to revive an economy that was on its knees, which even the outgoing president admitted that could not last for 3 months, which IMF had said we were one of the 6 countries in Africa which was going to default in debt repayment. We have survived. The other 5 didn't survive. Is that not expertise at work? Ama namna gani? I think that is expert at work. And I can take credit for it because I'm the one who lead the National Treasury. So I know I've said a lot. Let me go back to my written speech and quickly finish. You will forgive me if I bored you with so much, but I wanted to put it in perspective because really, you know, when we don't speak about these things, those who speak negative will carry the day because they are the ones whose narratives will be heard. But I am speaking things that you can confirm, you can check, and you confirm to be correct and true. If you move across the country, no one can tell me that they are not seeing roads being constructed. These roads are stalled. Those who are wakulima wa majani chai can confirm what I'm saying. Kahawa, the same. Maziwa. Remember when President Uhuru was in power, I remember the biggest complaint from regions where they produce a lot of milk was that he was killing the dairy industry. And they were putting for selfish interest. Today, I don't hear those complaints anymore. I don't hear people complaining that kahawa, tunamaliza kahawa. I don't hear people complaining about tea. I don't hear people saying Mau Mau roads or whichever roads have stalled. What I hear, dignity, usiguze mlima. Am I the only one who hears those things? Usiguze mlima, our people need dignity, si maendeleo. Iyo maendeleo sijui pereka mahali pengine. I have never heard a leader saying, don't give us development. Hata kama ni ya kuhongwa, please, I would welcome it. Even if you want to bribe me with development, please do, come, bribe me with development. So watu wanapenda development. So ladies and gentlemen, I also want to speak about priority programs with measurable impact and value for money. So in an environment of constrained resources, we must prioritize interventions that deliver the greatest public benefit per shilling spent. Cost-benefit analysis, clear monitoring indicators, and evidence from prior implementation should guide program rankings. Both capital investments and recurrent expenditures must be assessed for their short-term outputs and long-term contribution to productivity, inclusion, and resilience, whether in agriculture, manufacturing, ICT, health, education, or the blue economy. When prioritizing, sector working groups should apply transparent, evidence-based. Umeona nimeongea sana. Imerudi. So I was saying that when prioritizing, the sector working groups should apply transparent, evidence-based criteria, which include alignment with better and MTP4 value chain priorities. So you need clear resource requirements and adhere to provided budget ceilings. Detailed justification and supporting documentation for proposed funding. Advancement or completion of ongoing and stalled projects. Potential for job creation, poverty reduction, and mandate alignment. Climate change mitigation and adaptation considerations. Cost effectiveness, efficiency, and long-term sustainability. And finally, compliance with constitutional and cabinet directives. So sector working groups must document sector-specific prioritization criteria and apply consistent, transparent methods when allocating resources. Additionally, this year's guidelines introduce important thematic requirements. All expenditures will now be climate tagged to integrate climate risks into planning and budgeting. We are also mainstreaming social equity by requiring mandatory tagging for programs addressing, and listen to this, addressing the needs of children, persons with disabilities, and gender-sensitive initiatives. I hope you are taking notes. This will go a long way towards improving government's mechanism for monitoring the impact of budget on climate and diverse socio-economic groups. Ladies and gentlemen, over the recent years, Kenya has strengthened the systems and institutions that underpin budget credibility. Our Financial Management Act, or Public Finance Management Act, consolidated fiscal rules and strengthened intergovernmental frameworks now provide clearer guidance across the budget cycle, from planning and formulation through parliamentary consideration to execution, oversight, and audit. And I wanted also to mention that in the process of taking public opinion on issues of pay as you earn, I will also be conducting another public engagement on budget implementation this time. I will be going to various regions and telling them in this region, in this budget, this is what we have for you. Because I think that has been missing. And telling them the process and the progress of how those projects are being implemented, so that we don't just keep budgets here without Kenyans knowing what is available for them. Every village should know what was in the budget of 2026-27 for them and what to expect in 27-28 in the spirit of accountability. These reforms have improved transparency and predictability, boosting investor confidence and public trust. Institutional reform is continuous, and each cycle highlights opportunities to refine fiscal rules, improve macroeconomic forecasting, strengthen program costing, and tighten expenditure controls. Therefore, the sector working groups process is central to that ongoing improvement. By facilitating structured, evidence-based dialogue between national ministries, state corporations, county governments, and development partners, these working groups ensure sector strategies are translated into properly costed programs and realistic spending plans within Kenya's medium-term fiscal framework. And in fact, Albert Mwenda, this time when the budget is being processed, I need a clear report on how we have done with zero-based budgeting. It should not just be a talk in our books. I want to realistically see how the zero-based budgeting has transformed the budget process, because we have implemented it. We will deepen reforms that strengthen fiscal governance, improve value for money, and enhance fiscal sustainability. Reforms will address policy, legal, regulatory, and governance bottlenecks across revenue mobilization and public expenditure management. So key revenue reforms will include full implementation of the national tax policy and the medium-term revenue strategy. 2, it will strengthen tax administration through technology investments to broaden tax base. I know this has been very difficult. We have tried to broaden tax base. It has been fought fiercely by those who don't want us to broaden the tax base. 3, enhancement of non-tax revenues by building MDS capacity to generate service-based revenues and improve operational revenue systems. On the expenditure management, we will pursue measures to ensure efficiency and transparency, including rollout and adoption of the e-government procurement system across all procuring entities. Let me say this, and I said it when I read my budget speech. PS Cyril Udede, Wagunda. From now, there should be no exemptions. Those exemptions you have been forwarding, their time is up. Closed chapter, everybody go EGP. July to June next year. I don't see any reason why you should still request for exemptions any further. Now, this program has kicked off and it is successful. Number 2 is full operationalization of Treasury single account. I hope this is concluded already. Treasury single account now has been rolled out. Progressive, number 3, progressive transition from cash-based to full accrual accounting in line with IPSAS standards. I think we have made also very good progress in moving from cash basis to accrual. Number 4, sustain application of zero-based budgeting principles requiring clear justification for all spending items. So I have already given direction on that. Number 5, digitization and automation of pension administration and payroll through an integrated enterprise resource planning platform and HRIS of Kenya. Again, on the pension digitization, I am sure it has been rolled out. So that there should be no problem again. 6, optimization of national assets and liabilities through the optimal asset utilization framework, IFMIS-based asset tracking, asset tagging, and valuation aligned to accrual accounting. I held a meeting last week where we were discussing the valuation of assets. I think this also should roll out seamlessly. And finally, continuous rationalization of state corporations and scaling of public-private partnerships, including operationalizing the National Infrastructure Fund for commercially viable projects. National Infrastructure Fund is up and running. The board is in place. They are presently now recruiting CEO. They are preparing, as we speak, investment policy statement for the council, which I chair, to adopt, and then we take to the National Assembly shortly. You will see the investment policy statement on the National Infrastructure Fund out soon. I think I'm not very far from concluding. Those who are getting tired, we are about to conclude. So, ladies and gentlemen, I want to speak to promoting transparency and stakeholder engagement. Transparent budgeting strengthens public trust and enables, and you can see, because of the efforts that we have taken in being more transparent in budgeting, you can see the level of interest that now we are attracting. Even public participation exercises that I conduct across country has very high and heavy attendance, even from the young people. And that is clearly evidence that transparent budgeting would strengthen public trust and will enable constructive oversight by citizens, civil society, private sector, and development partners. So sector working groups should make program rationales, costings, and performance targets accessible and invite meaningful inputs that inform sector priorities. Don't just tick the box. Inclusiveness will yield more resilient and responsive policies that are better grounded in local realities. So public participation is actually a constitutional requirement and a cornerstone of sound fiscal governance. Article 201 of the Constitution and Section 35(2) of the PFM Act 2012 require inclusive engagement in financial matters. So sector working groups must therefore ensure meaningful stakeholder consultations to capture citizen priorities and expert inputs during budget formulation. The outputs of the sector working group process will feed directly into the 2027 budget policy statement that will be out in February, which will set the framework for finalizing the financial year 27-28 budget and medium-term fiscal plan. Now, let me quickly, which is the last point I'm speaking to, talk about strengthening integration between national and county planning. Effective service delivery depends on coherent coordination across national MDS, county governments, and local communities. The National Treasury's role in managing transfers, including equitable share allocations and conditional grants, and the Council of Governors' participation in planning are therefore essential. Sector working groups must ensure national plans are cognizant of county capacities, that county priorities are reflected as conditional grants where appropriate, and that financing modalities support aligned implementation across both levels of government. As set out in the Public Finance Management Act and attendant regulations, the timely preparation of policy documents and bills is essential. Accounting officers must follow the schedule set out in the Treasury Circular number 10 of 2026 to enable efficient review and approval by Cabinet and Parliament within the constrained time frame that we have. In conclusion, the financial year 2027-28 sector working group process is a timely opportunity to sharpen policy choices and make strategic allocations that accelerate inclusive growth and improve public services for all Kenyans. Let us use this forum to be frank and constructive, to apply evidence and sound economic judgment, and to reinforce the accountability frameworks that ensure resources translate into measurable benefits for our people. Kenya's fiscal space is finite. The quality of our choices will determine whether we can achieve sustained development while maintaining fiscal stability. I urge each sector to bring forward proposals that are realistic, well-costed, and impact-oriented. With discipline, collaboration, and innovation, we can craft a budget that reflects our shared priorities and delivers meaningful results for every Kenyan. So, ladies and gentlemen, at this juncture, it is my honor, therefore, to officially launch the financial year 2027-28 medium-term budget preparation process. I want to thank you for your dedication, and I wish all stakeholders a productive sector working group process. I thank you, and that is the end of my speech. Thank you very much.
That is not enough for the CS. Can we appreciate him more? So according to our program, we have one item remaining, which is highlights of the fiscal year 2027-28 and medium-term budget preparation process by the DG. However, in accordance with our tradition, we normally accord you the opportunity to ask questions to us, to the CS, and we shall support him in answering the question. So, CS, the microphone is there, and we can take up questions. Before we do that, let me just say two things. First, in the 4 years I've been PS, National Treasury, this is the most attended launch of the budget preparation process. It's full everywhere I can see. Let's appreciate each other once more. Number two, I want to appreciate two cabinet secretaries who have supported me. Professor Njuguna Ndungu for 2 years and John Mbadi for the last 2 years. Can we appreciate? More so for John Mbadi, I think he has done a lot more than we can do. He's a politician and he can speak to many issues. He has made my work very easy. Can we appreciate him once more? And then all our staff at the National Treasury have done a good job. Please, let's appreciate him also. Yeah. So, CS, I now hand over the chairmanship to you, if you can help us, or I can help you in taking up questions. So, let's take up questions. Please be brief. Tell us who you are and the sector you represent. There's a microphone. I can see PSS who are here. They want to leave. You are free to leave. So yeah, I can see someone there. Please go ahead.
Yes, thank you very much. Joseph Musheru from the industry of intellectual property, MCSK. I've heard much of contribution on how you raise revenue. And it is clear that even the CS mentioned something very interesting, that there has been resistance when you are trying to create economic-based revenue system from the oppositions and other people. I don't want to speak so many things that I know. I will touch just a few. When you look at the society that pays the taxation, and I would like you to be very sensitive in this, because you have to come up with the proper economic models that can bring money to the government so that there can be services in return to the public. If you go around our country, wananchi wanaonyeshana wanataka kufanya kazi 24 hours. What I'm saying, if you're planning to increase an economic base of revenue collection from the people, because the revenue comes from the people, why don't you think to come up with a 24 hours economy stage by stage? You might not be able to roll it out all of a sudden, but stage by stage. What do I mean? The workers who work for the day, they get their pay. The workers who will be working in the night will get their pay. And these are the people who will bring money to the government. Number two, the issue of corruption. Tunasoma kwa magazeti, hata siku moja nikamuuliza rafiki yangu, kile tunasoma ni ukweli? Akaniambia ni ukweli, kwa sababu kama sio ukweli, they can sue the newspapers and the magazine for libel. It is very sad, some of the embezzlement of public funds we read in the papers, and many culprits, they are walking scot-free. So CS Mbadi, nimesema sitaki kusema mambo mengi, lakini ya mwisho ni hii. When Kibaki took the government, he came with an economic model, VAT, value added tax on a retail level. Moi hakuweza kucollect pesa. Tunasoma record kwamba alikuwa na collect about 750 billion na alikuwa anasimamisha serikali. But when Kibaki introduced VAT, value added tax on every item, collection revenue ya Kenya iliruka kutoka 750 billion to 2.2 trillion ile inaingia kwa Treasury kila mwaka. Na najua kila mtu amesoma hiyo kwa magazeti. In a country with a population of about 50 million and above. So we want to see the balance. Alafu tunaambiwa kuna deficit recurrent budget. Siwezi elewa inatoka wapi. So please, 24 hours economy, think of it. Corruption, you stem it, and come up with economic model. Pesa iko pale, lakini how do you collect it, and there will be no public outcry. Thank you very much. I'm Joseph Musheru.
Thank you very much, Joseph, for the questions that you have asked, and also the insights and the contributions you have made in terms of what you think should be done. On the issue of expanding tax base, I spoke to this, and what I said, and I stand by, is there are so many Kenyans who pay taxes religiously and are committed to paying tax and diligently. But we also have a number of us who are earning even higher incomes, and they don't pay taxes because they are largely operating in spaces where visibility is lower. And when you try to come up with methods that would help net some of these people, then there is resistance from the population. Some of us are the ones who are even overburdened by taxes, and still we are shielding those who don't want to pay taxes. One classical example, we have always proposed some measure of Kenya Revenue Authority checking the financial records of people, not just any record, financial records. And that has been resisted. Data privacy, there can never be any privacy about financial records unless you are a money launderer or you are getting money through illegal means. If money that you receive is legitimate, you have no reason why Kenya Revenue Authority cannot ask questions about the source of your income. And we have so many people who have monies that cannot be explained, but still you find they are being protected when you propose a legislation to that effect, and many, many others. So we must take a decision. Do we want to broaden the tax base and have most Kenyans pay taxes as opposed to just a few of us paying taxes, and yet all of us get services? And yet I know, yes, you are correct to say that services should be commensurate, and that I support. But it should also not be used as an excuse to say that that is the reason why we don't want to comply. Because again, if you look at our expenditure and our budget, a lot of resources go into providing services to the people. I've just mentioned about roads being constructed across the country. Those roads are being used by people, those who pay taxes. You look at the budget of education, we have employed over 100,000 teachers. Those teachers teach in our schools and they teach our children. And there is capitation that goes to schools. It is not enough, but significantly it has increased. It goes into supporting social programs. There is cash transfer. We release about 25 billion to vulnerable people. Those are Kenyans. Those are taxpayers. And they're our people that we support. And I can go on and on. Health sector, we are supporting health sector. Challenges with SHA, which are being worked on, but we are supporting those sectors, and including even agriculture and providing fertilizer subsidy. I can go on and on. So there are services that Kenyans receive, but we can do better. So it should not be used as an excuse. On 24-hour economy, I agree with you. We need to have 24-hour economy in major towns of the country. But that can only be realized if we guarantee certain primary enablers, one of which is energy. People cannot do business if we have unreliable energy. Reliability of energy is a challenge where we're doing rationing. So we must guarantee that, and that is why National Infrastructure Fund became very important, because we didn't have enough resources to ensure that we get the 10,000 at least megawatts of electricity that we are aspiring for. On corruption in government, I know this is a cancer. I know this is something we must fight. There's public theft of public funds. But again, we also cannot just say that this administration is doing much worse or there's more corruption in this administration. In my view, if you ask me, and it may be controversial, but I want to say it anyway, with all the sensitivity and alertness that Kenyans now have, and the propaganda from the opposition against this government, if there was corruption, it would be all over, including the media that we have, which has become very, very, very vocal in communicating. Although one or two sometimes veers off and does their own things or do their own things. But with all this publicity, there would be a lot of exposure on corruption. And now we are in the 4th year of this administration. I don't think there is any administration that I can think of, from Kibaki's administration to Uhuru's administration, and even Moi's administration, although Moi's administration started earlier, which has survived 2 years without a scandal. This government, this administration has survived it. And it is because we came up with a policy of zero-fault audit. And you can see even audit queries are going down. Just sample, just take the audit queries, compare what we have today to what we used to have previously. They have come down, and we must thank this.
Thank you very much, Bwana CS na high table. Bwana CS na high table. My name is Daniel Murugu. I'm participating in this meeting as an interested party, as a taxpayer. And of course, I'm not rising to ask any question. I would want clarity in this booklet, page 20, page 20, in terms of representation of from the private sector and maybe stroke civil society. I'd want that confirmed that this year we'll have this kind of representation, because for as many years I've been here, I don't think this has ever been complied with. Then I look at page 20, 27, on what is actually called court awards. I want what will actually be presented here in November. I would want a rationalization of the current pending bills, which reflects as court awards. Now, what I see is, my take is very simple. It's actually to confirm to you that you have undertaken rigorous policy reforms that actually inform better budgeting. And I want to give an example, because all these have been subjected for mandatory public participation all over Kenya, and personally I was able to attend where I come from, and sometimes in Nairobi. I look at GOE, government-owned enterprises. This is perfect, but I find you are doing piecemeal, removal of the existing board members. I do want you to move very fast. You clean all the existing boards, so as you're able to recruit afresh within maybe the qualification you desire. You also presented cryptocurrency regulations. This was subjected for public participation, and we're able to give our inputs. That I support. The presentation I've had today morning, I didn't hear anything about internal auditors. Yet all too soon, you presented amendment to PFM Act on the functioning of internal auditors. And it was very categorical that you'd want to give them operational independence, number one. Number two, you'd also want to capacitate, give them finances to be able to do serious internal auditing. So all the presentation we've done, I didn't hear the aspect of internal auditors, and these are actually very good, very effective professionals who actually used in budget tracking. Then, under PPP, yesterday in Nevasha, handling amendment to the PP Act. 2 days, yesterday and on Monday. And we support, because this is forward planning in terms of how we engage on the implementation of public-private partnership projects. That's another area you have subjected for public participation, and I support. I don't want to belabor on our sovereign wealth fund. That is supposed to give us long-term benefit in terms of saving money for future use and also for future generation. In terms of infrastructure fund, I was here. On April 27, I appeared before the finance committee, and we supported the same. Would want to see immediate takeoff, because when PS Kipto, you give a figure of 2 or 4 billion from Safaricom and 106 from Kenya Pipeline. I support. Would want to see this fund starting to give Kenyans the benefit to serve.
Thank you.
Finally, what I want to humbly request as a Safaricom shareholder, for the remainder 15% shares for the Kenya government. Maybe this can be ring-fenced in the next 10 years. Thank you very much.
First of all, Morogo, I want to congratulate you, not because you praised me, but I want to also praise you. You have been consistently attending public participation engagement on public finance management. And I think that kind of interest is rare. I want to congratulate you for that and commend you for what you have been able to do. I will address a few and maybe ask PS and DG Mwenda to come in for others that maybe I will not have mentioned. And especially to clarify on page 20, 27 that you talked about. On GOE, we are presently recruiting. We have started the process. The selection panel is in place, and they have advertised for a number of GOEs, and already we have received interest from Kenyans, amazing. I'm told over 15,000 Kenyans have applied to be board members in about 30-something GOEs, something that is very interesting. So the process of shortlisting is going on, and we will comply with the law and the acts without any violation to make sure that our GOEs are well run, because that was the idea, with commercial mindset. Internal auditors, yes, there are a lot of changes that we are making to make internal audit work better and to give value for money and to help improve our systems, because we saw a clear gap and loophole where internal audit was compromised. So apart from that operationalized efficiency, independence, we are also looking at the efficiency of internal audit, which includes proper funding and also includes that we protect them from being victimized. And that's why we have already communicated that now going forward, internal auditors who carry out their work diligently will not be victimized. I've heard you and listened to your request on keeping 15% of Safaricom shares that is remaining ring-fenced. I think your fear is that the government should not lose control completely of Safaricom. But again, confidence you should have is that even the divestiture that we carried out, a number of institutions which have purchased shares in Safaricom are actually public institutions, our pension fund. So there's largely, the company is largely still owned by our people. And again, the kind of the legal framework we have protects investors very well. This is our company. It is a Kenyan company. It is the most profitable in the region. It's the largest in the region, and it is even going to do much better. So, PS, if there is anything that I left out, together with Mwenda, you could take.
Just to confirm, says that we have the internal auditors bill. It's a draft form which is now going through public participation. Through this bill, there's intention to set up the Institute of Internal Auditors, and also to protect auditors from executive interference. There's also need to regulate the professional practice of internal auditors, just like along the line of ISPAC. So I think you are welcome. Just to also agree with you, CS, that Buru has been a consistent member and a participant, and his quality of interventions has even improved. So let's appreciate him also. Thank you.
CS, if I can respond to there are two issues on the court awards, and there was another one on the private sector participation. I think on the court awards, we will actually include, if you look at the guidelines and the guidelines that have been circulated today on page 44, the sector reports should include the court awards analysis. So that tabulation should be provided, and it should be part of what then is looked into when the sectors report back. So there will be that reporting. And then on the private sector, you will agree with me.
For the Sovereign Wealth Fund, the Infrastructural Fund, and all the other amendments that you have been able to do in your current government. I'm coming from an organization called MMV Associates CLG. It is an advocacy organization, and in the same time, it is an humanitarian organization for the elderly and for the people who fought for the freedom of this nation. So we have a lot, but we have put it in a memorandum. We would love to kindly, when the time comes, we present to you with our representatives from all across.
What's your name?
Emma Cassis.
So.
Thank you so much, sir.
So one last one. Now it can be a gentleman. I think I've done some justice to gender, isn't it? Oh, but there's a lady, okay.
Yeah, all protocol observed. My name is Lucy Maina. I work in the State Department for Public Health and Professional Standards. Just an input into budgeting and the budget for Kenya is that looking at what we prioritize, I'd like to suggest that we also think about human capital. And what I want to say is that as much as we want to have a productive nation, I think in terms of wellness, we have not really invested enough in terms of preventive health and wellness. And what do I want to say is that looking at the infrastructure, we are doing well with roads, but what about the environment in terms of sewage, waste management? Looking at youth, for example, we want a productive youth, but we have data showing us that, for example, young men 14 to 19 years, 43% of them are thin for their age. So just thinking through maybe their nutrition, thinking about physical activity. So I think when I was growing up, we had programs. We had a lot of programs for social capital, which somehow have fizzled out. I think I just want to propose to the government to think through the human capital, the social capital, and some of the programs that we can do. Thank you.
Thank you very much. Not in any order, I will start with this, the human capital investment. First, I would ask Lucy that we have just started the sector working groups. And I think a lot of proposals, those proposals can be made to the relevant sector, because that is why we are here. Those are the kind of ideas that we need, so that when we are budgeting, it's aligned to priority areas that probably have been ignored, like what you have just stated, where we are not thinking about the health and wellness of our people. We need to put in more resources there. I know we are putting quite a bit in this universal health coverage, but there are other areas of health consideration that really need to be looked into, and I agree. But in terms of human capital in totality, including education, also needs to be addressed, and this budget is going to address it. One of the areas that I want to point out is, if you look at last year's budget, this year's budget that we are rolling out now has more investment in education. But above all, we have even come up with a more innovative way of financing our higher education, the university education. But we have also included the colleges, the TVETs, but we have also included KMTC, which previously were not getting the funding from Higher Education Loans Board. And we are coming up with a system where those Kenyans who cannot afford paying, or those who want to be supported in paying school fees for, will be supported almost fully. Yeah, that is what the president communicated yesterday. And I saw some people saying that we are reversing. There is nothing we are reversing. We are moving. The system that we had for funding, the model of funding, is better than what we had previously, but has still not cured the problem of those who cannot afford paying fees. Especially the example the president gave yesterday, that a child from a poor family is invited to go and do medicine, but cannot, simply because the cost of medicine is prohibitive compared to other courses. So they'll end up in courses that they didn't desire just because of lack of funding. That is what we want to cure, because that would perpetuate the culture of poverty, that if you are poor, you remain poor permanently. That is not the country or the society we want to live in. Some of us today would not be sitting here if that was the society we were brought up in. Now, on the Jepchirchir, because I think Emma Kasisi just had commendations and said that we have done a few things right, and she's happy about it. There are very few people who would tell governments like that, especially from advocacy. So I also want to thank you for being honest in your assessment. But if there is an area where you think we can do better, there's nothing wrong also with pointing it out. On the issue of allocating resources or ring-fencing resources to support the better, actually the whole budget is anchored on better principles, the 5 pillars. So I expect the sector working groups to keep to mind and align their budgets to better principle, and that is what I spoke to here. And I even spelled out how they should go about it. So any proposal that is not in line with the better principle will not be included. But you asked specifically resources going to some specific categories. Again, I'm sure you listened to my speech. I said your budget must be alive to issues of children, must be alive to issues of PWDs, and must be alive to women issues, because these have been marginalized groups. But something I needed to have added, that your budget should speak to inclusivity. We have seen cases where some MDAs, some state departments, their budgets are concentrated in one area. That is not a budget I will take. I would guarantee you this. This is how this country has had inequitable development over the years. There is no reason why you should concentrate money in Homa Bay and leave Tana River, for example, or leave Wajir.
It affects the entire process. So as a way forward, please, sectors, please help us to ensure that we remain within the timelines. And in that context, I believe many of us received this yellow booklet, which is a document that captures the circular that was issued by the Cabinet Secretary in July, and it captures the process that that has been articulated for purposes of the sector working groups and the entire budget process. In terms of course, the objective of this sector working group is to help us achieve the alignment between the plans in the form of the Vision 2030, the MTP4, and the better, and to coordinate those policies and plans. And we therefore have 8 sectors, which most of you are aware of. We have 8 sectors, and each of those sectors is expected to establish or to constitute a sector working group, which should have a chairperson, a sector convener, a sector co-convener, a technical working group to process or to do the more technical work in terms of program costing. We should also have the secretariat to each of those sector working groups, which is to deal with the logistics and to support the chair and the conveners. And then, more importantly, and to respond to the question that was asked, we must have private sector representatives. And we also must have development partners representation, so that we also align the development partners' initiatives with our plans. Please, let's make sure that that is done. And what, if you could go to the slide on the responsibilities and the terms of reference for the, so quickly, I think the first objectives, or what should the sector working group should help us achieve, is to achieve strategic alignment. And it's been said, and that's why we presented here the MTP4 and the macroeconomic framework. And we would like that the two speak to each other, and the budget ultimately should speak to those two presentations that were made here. We should conduct project vetting to determine and to also clarify how they are contributing, for example, to job creations, as it was explained here. Please conduct a thorough project vetting to ensure that it will help us to achieve the objectives that have been set out. We should also conduct a cost-benefit analysis. Are we achieving the best with the resources that we set aside? And the other, and we will share this, and this has already been articulated in the guidelines. Please ensure that the prioritization is done properly. Identify the PPP projects and make sure that those are processed through the PPP. And the rest is you will see in the yellow book that I have, and make sure you get the yellow book. And then, more importantly, and these are the timelines that I would urge you to ensure that we adhere to these timelines. We have already issued the budget circular. The CS has issued the budget circular. We have launched today, 22nd July, the sector working groups. Please ensure you submit the baseline requirements by 12th of August. It is very important, because if we don't have those ones, then you start delaying the other processes. Ensure that your reports are with us, because those are the reports that will be used to develop or to inform the budget policy statements, the sector working group reports. Please ensure that they come to us by 2nd of October, so that we do not delay the other processes. Ensure that the public hearings, will ensure that the public hearings are done as scheduled. And then, finally, if I could go to the last slide. Please, the last slide, please. We appeal to the chairpersons, the outgoing sector working group chairpersons, to continue until there is replacement of the chairs, so that you can help ensure a smooth transition to the new sector working groups. And since as chairs you've conducted this, we've provided guidelines on what then is expected for the sector working groups in terms of constituting the sectors and in terms of how to conduct your SWGs. Finally, CS is to thank you and the PS and the other PSs who were able to join us, and to thank the stakeholders who have joined us today. Thank you, and I'm informed, CS, that there is tea served after this, and you are all welcome to partake. Thank you.